Okay, welcome back everyone. Let's get right into the stock market technical analysis. We're looking at, there's some movement obviously in the large cap tech stocks, exactly like we thought it would play out, you guys. So, this rally that we've talked about for a couple weeks now, if you go back and look at my thumbnails, I've been calling for a rally mostly in tech. And we have seen that rally. We've seen a decent rally. So starting off with the triple Qs, we, from the lows, from the all-time, or not the all-time lows, but the near-term lows, we are up about 16%, 16.5% roughly. So a decent rally so far in the triple Qs. Now, this, we are running into resistance right now. So I have had this resistance right here about 315-ish. And I think we've hit, we've hit it in the pre-market. I think we were up there right around 315. And so far today, we're just kind of right in this area as well. So this should be resistance right in here. We should get some sort of a rejection or a pullback. I don't know if the rally's completely over, but I would think that we're going to get some sort of a pullback right in here before we go on to make the next and final level, which is this downtrend line right there. I've got it marked out. So I've been calling for this level for a while, but I do think we get a pullback here. So, I'm looking to probably just game a short here and probably just short it. Areas to watch where I think we could probably hold up, or like minimum targets for the short would be, could be right here about 308. And potentially, you obviously have this uptrend line. This is your uptrend right there. So we could sell down to the trend line. All right. If we got that and we sold down to the trend line, that would be an objective area to go long right there. And then that would be likely the final area you go long, and then you rally into the major downtrend line. And that's all she wrote. That would be likely the end of the rally if we saw that. So I'm kind of leaning that way. I don't know if we get a pullback all the way down to the trend line, but it is obviously possible to do that. There is, and we'll just watch these support levels as we've sold down. So 308, I've got another level here about 304.80 and 300. Those are kind of the levels, and then obviously the downtrend line. So it does make sense to short right in here, at least from my perspective. One of the reasons why is Amazon. So I did short Amazon. I shorted it yesterday in the after hours. Down slightly right now, but not much. So in the after hours, Amazon gapped up pretty much right to this area, about the area that I've had marked out is about 135.88, and it pretty much gapped right there. And so when I saw that, I took a short on that at that level. We've got lots of resistance right in this area. So the 200-day moving average is right overhead at about 145, but this is a key level of resistance. As I zoom out, you can see we held that as support, lots of areas of support right in there, and we are right there at that level. So at major resistance with the 200 just overhead. Now we could chop through it a little bit. You got to give it a little bit of room, because the algos know this level, so they're going to try to run stops and everything. So give it a little bit of room, at least from my perspective, but it's the zone of resistance where in the coming days to weeks we should be profitable by taking a short at this level, at least from my opinion. And then where do we trade down to? Well, gap fill is probably a pretty likely level. There's also, you've also got a little bit of resistance right there, or support right in here. Right, let me mark it out. It's right about here at 129.46, so that would be probably the minimum target. But I could easily see I could easily see Amazon topping out right in here and making the next leg lower. To me, this looks like an objective area to start building a longer term swing short position. Anywhere from here up to the 200-day, anywhere right in here is where I want to kind of build a position. So I'm willing to add to it and probably give it a little room. And add to the short. And ultimately what I'm looking for on this trade is the next leg lower in Amazon. So that would be all the way down here, breaking the lows and heading lower. So again, you got to give it a little bit of room. It's going to take a little bit of time, but I like it. On the hourly, we've got If I look at the hourly here on Amazon, yeah, no real divergence yet on the hourly. A little bit there on the PPO, not on the RSI. So you'll see here, we're making a new high on this move. The PPO, though, we do have slight divergence, not fully confirmed. So not a lot there yet. It's just a key level, and I expect we'll probably chop around here for a little while, probably a couple weeks, and then build that divergence over the next couple weeks. So that's what I'm looking for there. Okay, Netflix. So Netflix continues higher. I still think we're probably heading up to the minimum target here of the gap entry that I've had marked out for quite a while. We've been talking about this for weeks, maybe even months. But there's your gap entry, and it's right at 245.50. So again, we've been watching Netflix for a while now. Basically from our breakout right here, even if you took it to the end of the day, Netflix is up 22%, 23% with a little bit more to go. So from my perspective, we've just about finished this trade. Yeah, there is the potential for gap fill all the way up here at 327.90. I don't know if I want to hold out for that. At a minimum, you should get a rejection right here at this gap entry at this level right here. So check that out. So far, so good on this trade, but looking to start to take profit here pretty soon. So the way I see it is Q's is likely going to kind of chop around for a little while up in here while Amazon does its thing and chops around. I don't see too much more upside in Amazon, so likely Q's probably doesn't have too much more upside, but it could chop around a little, and then Netflix can probably run up here and make this while we're doing that. Oil. So you see oil is bouncing off support. I talked about that yesterday, how we're at support. It has not been broken and up 4%. So guys, this commodity trade, this inflation trade's not dead. It just took a little breather as oil and some of the ag commodities came off a little bit, but it looks like the buyers are right back in there buying the dip in the commodities. And if these continue to hold support and continue to push higher, then you're likely going to see the inflation reading continue to spike in the future. So I don't think this bear market is finished in just tech. The reason why is the bear market is going to trade on inflation. So if you get high inflation readings, then the market's going to say, oh, the Fed's going to need to hike, sell off growth, sell off tech. Okay, so that's what I see in play right now. So if the commodities, oil continues to rally, inflation will continue to hold up, maybe a surprise to the upside, which should continue to put pressure on growth stocks. So keep an eye out on that. Gold's at resistance, so I'm expecting a pullback right here, but there's resistance, 1750. Maybe you get a pullback back down to 1680, maybe just a slight pullback, but I'm probably expecting a little bit of a pullback here. And then the miners, GDX, you can see we're in a bullish pattern, bullish falling wedge pattern. All right, so that's a bullish pattern, and we have bullish divergence right there on the RSI. Let me check the PPO. Yeah, it's there on the PPO. So we have bullish divergence, bullish falling wedge. We just need that buy signal, that breakout, and we just don't have it yet. So right there at resistance, need that buy signal, that breakout candle in order to trigger, more upside on the miners. So until we see that, we're gonna just chop around. We could pull back, could go back down to the wedge. There's lots of potential, but it's a bullish setup just without the buy trigger. Meta, again, just bouncing back down to this support level. Here's the thing I want to kind of point out. I'm not in love with this trade idea. A couple things I don't like about it, and I just want to make sure you guys know. This wedge right here, we had a break right there. Yeah, we had one reaction. We had another there, and this is kind of the high, but we did get a little break, a whip through it. That wasn't like fully confirmed. The other thing is the triple Qs is running into that resistance level. Amazon's run into that resistance level. These could all put short-term pressure on the triple Qs. So, if triple Qs does have some pressure and it continues to sell off, Meta is likely going to sell off as well. So, could be a false breakout on this one. Yeah, the setup's there. It definitely has the setup. We have bullish divergence. But again, you always want to defer to the triple Qs. You want to have the other large cap tech stocks kind of aligning with your trade, and with triple Qs running into resistance, then I could see some pressure here. So what I'm doing, just to let you guys know, is I'm looking to take a short, kind of a short-term trade on the triple Qs, potentially trading it back down to that trend line down here at 290 or so. That would be a great trade if we could get it. I mean, that would be a drop from the high down to there, 6-7% or so. So I'm looking for that, all right? And then if we get that, I'll flip long for the final move higher up to this, this final resistance level. And again, that kind of plays into the fact that I thought this rally was going to last weeks to months. Well, that doesn't mean, you can't have a rally that lasts weeks to months if it just shoots straight up. So if it pulls down and then rallies, that could put some more time on it. Again, by the time we rally all the way up here, you likely will hear the headlines, the news media will all be very bullish, talking about, that's the end of the bear market. We're going to go on to make all-time new highs. Everything will seem pretty good. The news headlines will be good. Maybe the reports will be good. But again, rallies don't end on bad news, okay? Rallies begin on good news. So I got that wrong. Rallies they will typically end on bad news, and big sell-offs or down moves will begin on good news. So if you remember back here at the all-time highs, unemployment was great, everything was great basically back here, and yet the market still sold off, and triple Q still sold off 33%. Nobody wanted to sell Facebook and Apple and all these stocks when they were, at the all-time highs, because their earnings were strong and everything looked good, and that's typically marks the top. So that's how I see it playing out. That's how I'm probably looking to trade it. If I'm wrong on triple Qs, maybe, if it pops above, 317 or so, if it pops above there, then it might just want to run straight up to this 330. I'll just stop out on my triple Qs short and, maybe even flip long and catch the move up to there. Bottom line, and I know it looks like a big mess because I've been talking about it every day. Bottom line, I'm looking to short. I would definitely be wanting to short right up here at that 329 area. Okay, that would be a very objective area to short for the next leg lower in what appears to be the beginning of a bear market. All right, guys, check out my course if you're interested. Give me a thumbs up. I'm going to leave the video here. I might put out one at the end of the day if anything gets crazy. Otherwise, Saturday morning, I do a live stream. I'm going to do that tomorrow morning at around 9:15 Pacific time. And we'll go through all the stock picks that you guys want me to look at, all the charts. Spend about an hour really analyzing, subscriber stock picks. So join us in that live stream tomorrow morning at about 9:15 Pacific time. And I'll catch you on the next one. Bye.